Alright guys, today what I'm going to look at is a footprint strategy, but this isn't using the footprint and saying, right, when I see this and this, I'm going to trade this. It's about knowing when to use the footprint and knowing what you're looking for with a footprint. Because a lot of the time people overuse a certain tool. They don't use it in combination with anything else. All they do is they go, right, when I see this, I'll do this. And that works when the time is right. So what I'm going to do is illustrate to you when the time is right and how exactly you can use a footprint in order to do this. So if we go and have a quick look at a chart, what I'm going to talk to you about is this move here. This is an S&P chart, and this is a trend move down followed by a balanced day. Now, the expectation of a balanced day comes from profile, and we'll be doing other videos on profile. So once you've got this expectation of a balanced day, now there are certain footprint patterns you can start looking for. Crucially, with this type of balance, you've got an expectation of a range to sell to the upside, a range to buy to the downside. Now, when the market rises, you've got an area from around about 34.25 up to 42.75. That's your area that you want to sell. Now, that's quite a wide range. So you're using a footprint here to pinpoint precisely where to sell, particularly once you reach the US cash open. Once you reach the main session, this is where the volume really comes in. This is where you really see the action. It really shows up on a footprint. So what we have here then is a classic absorption. And you can see this as the market hits the highs around about 40, you see someone absorbs and absorbs and absorbs. This shows up really clearly on the footprint. That's your clue to sell. But the big aspect of this is the expectation that you're going to see some kind of footprint pattern to allow you to sell there. The other great thing that a footprint gives you is options. Below the absorption, you see where somebody did try to sell on the original move up. They sell around about 360 contracts and the market goes straight through them. This point is where buyers take control. They take control, they run into the absorption, that stops the move. Now, you've got the clue to sell. And once you drop back through that 360, now the market's going to drop down. And the bonus that you get there, and this is where a footprint really offers its value, it offers you a kind of secret level, because we don't revisit the absorption. Instead, we revisit that turning point where the market tipped back over, where it tried to stop on the way up, stopped by the absorption, reversed through on the way down. That's what creates the level later on and allows you a second chance to sell below the high. That's what the value of a footprint is. It's not about looking for this pattern. You can see this pattern multiple times. It's about knowing when you want to use it. This was a situation with the expectation of a balanced day, footprint screamed out, now's the chance to sell. Defined your risk clearly for you, allowed you to maximize the entry, and then also gave you a confirmation point where you could be really confident the market's now going to rotate down towards the mid-20s and potentially then all the way down to double O's as well. That's the value of a footprint. Don't use it on its own, use it in combination with other tools. That's what we're doing at Axia. We're using tools in combination, knowing when the best time is to use them. Okay guys, I'll wrap it up here. Before I do though, come join me on a future webinar. I'll be running you through one of these footprint type trades, a footprint trade going into an open, as one of the things that we'll be covering in that workshop, amongst others. So join, click on the link, and I'll see you in the workshop soon.